Good evening. I'm Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Wednesday, the 13th of November, 2024, just after 7 p.m. Central Time. Well, it's another day where they're wiping out the gold market, the silver, both one after the other, taking down open interest with it. I haven't looked at it, but I bet it is occurring. And this is that washout that you get in these markets. It's very painful. Has anything really changed in the fundamentals? That's the big question. The bears will argue, yes, what's changed on the market fundamentals is the dollar's super strong and interest rates are staying high. Hold on. Is that the case with interest rates? Is the Fed really going to keep them high? Well, you don't know that yet. Today you had CPI number come out that did this. Just flat. Didn't go up, didn't go down really. You can argue it's just sticky, sort of stuck where it's at. Tomorrow morning, we're going to get the PPI number. Let me get this right for you right here through here. Here we are. And we're looking for that to show final demand of 0.2% up on the month and up 0.3 compared to September on the core PPI. So they're still climbing. The rate of ascent has slowed dramatically, but they're not going this way all the way down. They did at the beginning, but that had to do with being overdone from COVID, as you know, and the market has worked through the supply chains and all the other problems with that. So now this last mile, and what's keeping it up is healthcare costs, things in service industries that we still have to do, insurance costs, our rent, they're all still staying up at this point in time. And if you broke down the CPI, you saw that the market was dealing with a lot of defense spending as well. So those are the culprits that you have in the marketplace. We saw today that the U.S. budget, that came up a bit too. It was up over $100 billion. The last month it was about 67. The estimates were worse. So still bearish here in these markets. A fighting stock market that to me, as a chart technician, looks like it's getting a little bit long in the tooth. The dollar, not up dramatically tonight, up 8 ticks. So this is margin money, in my opinion, that's forcing people out. Most of the currencies are flat tonight. So as we come to the gold, one of the things we talked about, could the market get back to fight a battle at the 18-week average? It hasn't done it in a long time. You had to go back to last March in order to get where it did it before, and before then, a year ago. Right here in the October timeframe. And guess where you're at tonight? You're exactly at that number. So this is where I think the market's first major support test comes in. Right now, right here. And until you can really show that you can stay under that number, this is where people not in the market that are just moving average people probably looking to say, this is where I want to come in. You've had one heck of a break. Any way you want to cut it. $230 is a monster break in a market, all right? The trend is clearly down, lower highs, lower lows. The market is now tonight back to the 100-day average as well. So I'm getting some numbers that are very important to me. I'm not bottom picking, so don't take it from there. But I see a market that has been stretched out tremendously, and that's often an area where short covering by those that have been fortunate enough to catch this might be considering that. You've run the Bollinger Band. You're now 4 days in a row under that number, into it, and you're not embedded. That's not to say you can't go lower. Not to say you can't go to 24.44. But I do think this market, I really believe this market is one of these that you've got to sit back and say, it's overdone. Period. Would you want to put new shorts on here? Where would you put a stop if you did that? Ask yourself. The gold-silver ratio hasn't changed at all. Gold is still basically stronger than the silver market right here. When we look at the silver market, it's trying. Now I'm going to go where it finished today. Trying its darn best, 3 days in a row of fighting at the 100-day average in the Bollinger Band. Now, as you could see, and this is the close of business on Wednesday, both numbers did finish underneath 20. The day before they finished under 20, not the day before. So the key, if this market's going to embed, is now for the Thursday session. And if it does, then rallies in the market will start getting sold rather hard by the marketplace. Tomorrow's a crucial day. I said we would get to a day that starts determining things big time. This is the quote unquote big one as I see it that's going to determine what silver is doing. But silver and gold are under the same thing. Silver just came from roughly 34.5 and you're down $5 an ounce. 1, 2, 3, lickety split. I get the copper market break because without China, you don't get the demand for the copper. It's latched on, but it too has too many days to the left-hand side of the Bollinger Band. You can get a snap, just a correction out of nowhere. And platinum, I told you, when you got under and closed under this, now all these people are caught. And that's what's going on. You've got people caught in gold and they're bailing in the market and just saying, I've had it, this was just a bad trade and I've got to regroup. In the dollar index, the opposite. You've got how many days? You're just riding this. Remember what we call that? The gorilla glue trade. And the market's got 1, 2, 3, 4, 5, 6, 7 days of hitting the band. Over the band, it's 1, 2, 3, 4. You rarely go beyond 5. So you can get one more tomorrow. Are we embedded? We're not even trying to embed yet. So I think tonight and tomorrow are going to be the super days where we look back and say, was the blow off there? Did the market just say, no, I'm going even further down? I wish I could answer it better than that. I cannot. For those of you that do want to put these type of indicators on your charts, we have done our work with, let me get to it if I can. I can't. The ad went away. I hit the wrong button earlier. But on TradingView, we do put this out. So if you use TradingView and you wanted to come in and get this, just go to our website at iraepstein.com. And when you go to the website there, look in the client resources, give it a click, sign up for your TradingView. You get all these indicators outside day. There's 6 indicators we put on the pair for you. It takes up 2 slots. So if you're TradingView, you understand what I'm talking about. And it will give you my version of slow stochastics. I love to highlight outside days on charts where you can. And you learn if you take the course how important they are and what they're doing. And by highlighting them, very important, then you can go in and turn it off anytime you want as well. So I think it's pretty neat what we've done there. I'm Ira. Have a good evening. I'll catch up with you in the morning.